Hello traders and welcome back to the channel. The ECB has made a very bold move by cutting interest rates by 25 basis points. Now this is bound to cause a lot of fluctuations, a lot of moves in the Forex as well as the stock market. So are you ready to seize the opportunity? Let's dive into 3 strategies that you can use to leverage this announcement either in the Forex as well as in stock market trading. Please stay tuned. This is Friday Money Matters, this Friday and every other Friday on this channel. Thank you for tuning in. Please like, share, as well as subscribe if you have not yet subscribed. We greatly appreciate all your efforts to promote this channel. Our first strategy is leverage currency fluctuations, especially in the Forex market. Now remember what we have spoke about in the past. Whenever there is a change in the interest rates, there is bound to be a change also in the value of that currency relative to another. Remember, a currency's value is only significant if compared to another currency, because this tells us exactly the level of trade that is happening between the two countries. Now, in this case, we know that the ECB, which is the European Central Bank, has cut interest rates by 25 basis points from 3.75% to 3.5%. Now, what this is bound to make is there's opportunity to make the euro a little bit weaker compared to other currencies such as the British pound as well as the US dollar. So if you're in this market, the first thing that you ought to be looking at is shorting the euro. The reasons for this are just basic. Now, technically, we know that a value of the interest rates or the rate of interest have a direct impact sort of on the value of that currency. This means that investors out there, traders, see that currency as valuable depending on how much the rate is. Obviously, if there is a higher rate, it means that if you were to buy that particular currency, you are going to get an even better return as compared to another currency that has got a lower interest rate. So as a result, this decrease is bound to make traders move away from the euro to other currencies where the interest rates are a little bit higher in order to fetch a better return on their investments. However, it is most important that in such a case, you still need to monitor the market, look at exactly other indicators that are linked to this. You could look at CPI and so forth. That will have a link to your interest rates, because remember, if interest rates increase or decrease, this has got a direct impact on expenditure and demand for goods and services, which is bound to have other market implications. So you really need to focus on other indicators that are going to be affected by this move. The other thing to take note of is that such a rate cut is bound to also have other geopolitical circumstances coming into influence what will happen to the euro or to the entire European bloc. So as a result, you also need to be paying attention to other stocks in the European bloc, see exactly which companies are going to benefit from such a move. That's if you're trading the stock market, look at exactly which companies in which countries are in export and imports and how this will benefit your trading. The second strategy that you must be concentrating on if you are trading the stock market will be to focus on interest sensitive stocks. Now, interest sensitive stocks are those stocks in companies where, like I said before, either they're into imports, they're into exports, or they are basically companies that maybe do a lot of borrowing. Remember, with a rate cut, it means that the value of or the cost of borrowing will decrease. Now, you can look at a sector such as real estate, a consumer goods, and so forth. Now, those are sectors that will always respond speedily to either a rate cut or an increase in interest. For instance, in the real estate sector, we know that when the rates are lower, it means that now we've entered into a buyer's market. So there's bound to be increase in demand for financing in order to buy real estate. So which also means that stocks, real estate stocks, and so forth are going to benefit the most because demand, therefore, is increasing. If demand increasing, this might mean that those stocks will be highly valued, and the more demand, therefore, you create a snowball kind of effect, pushing the value of those stocks a little bit higher. The third strategy is to look for companies with strong fundamentals. Now, these are companies that are resilient to any economic changes, or usually will always perform quite well despite changes in rates, changes in CPI, and so forth. Now, with this rate cut, in other sectors, there's bound to be panic. In other sectors, there's bound to be a calm. Now, there are certain companies, you might know a few in whichever region you are in, or in whichever stock exchange or securities exchange that you're following. There are those companies that are resilient, that do not just follow what the central banks are doing. So you need to focus on this if you are to have a strategy that is sound and that has got a sort of proof that protects it from any sudden changes in the market. So these will become your go-to stocks, which will give you the kind of stability in your portfolio so that there isn't that panic. Remember, panic breeds more panic, and this might just be an opportunity for you either to make it big or to make big losses. So whichever way it goes is how you remain calm in this kind of economic environment. I also need to emphasize that if you're trading the stock market, you need to seriously pay attention to earnings reports as well as updates from analysts so that they keep you up to speed with what is happening there and how it is affecting your portfolio and the stocks that you're following, so that you can make the most out of any fresh news that come in. Remember, as far as trading financial markets is concerned, knowledge is power. Whoever has got the latest valuable knowledge which is proven always has the power to make the best decision. Now, knowledge and information about market moves and market trends gives you the right kind of insight to help you make the right kind of decision when it is required. Therefore, it means that you're going to be prompt in your decisions, and promptness means that you are averting risk and also making the most out of your trading. Please leave a comment down below and tell us exactly how you're going to leverage this rate cut by the European Central Bank. Otherwise, thank you for watching. This is Friday Money Matters. Don't forget to subscribe. We'll see you in the next video. Bye.